Welcome to Talk Tickers. Today, we're breaking down the latest earnings print for Ocean Power Technologies. That's ticker OPTTS. And let me tell you, this one was a wild ride.
Yeah, the market's reaction, it was swift and it was brutal. The stock went into an absolute freefall on earnings day, just cratering.
So what on earth happened on the print to cause that kind of drop? Let's dive right into the numbers that drove all this price action.
All right, so here's the top line story, and it's not pretty. We're looking at a massive miss on EPS, but the real shocker, that revenue number, a catastrophic collapse of over 82% compared to last year. Just, wow. Okay, let's get into the weeds of the P&L here. And spoiler alert, the picture does not get any prettier as we go down the line.
So that revenue figure, just over $400,000 for the quarter. To put that in perspective, we're talking about a shadow of the $2.4 million they did in the same quarter last year. A huge drop.
And it gets worse. Gross margin wasn't just down, it was negative. It completely flipped, swinging from a profit last year to a loss of $1.38 million this time around. That's a really tough number to see.
And then you get to the bottom line, and that's where you really feel the pain. The net loss ballooned to almost $11 million for the quarter. I mean, that is a huge leap from where they were a year ago.
Okay, this brings us to what might be the most crucial point of all, the cash burn. So check this out. The company has just under $12 million in cash on hand. But, get this, over the last 6 months alone, they've burned through over $13 million just from operations. You don't need to be a math genius to see that, well, that's an incredibly challenging situation.
But, that's all looking in the rearview mirror. If you actually listen to the conference call, management wants you to focus on a completely different story, a much, much brighter one.
Right out of the gate, the CEO just pivoted away from the quarter they just reported. The whole conversation immediately shifted to what's coming next, the forward-looking book of business. We're talking backlog and pipeline.
So what was their big explanation for that massive revenue collapse? Well, they're pointing the finger at the recent U.S. federal government shutdown. Their argument is that it delayed key project deliverables, essentially pushing that revenue into the coming quarters.
Now, this is where it gets really interesting. We have to talk about how they define their business funnels, because this is the absolute key to understanding the bull case here. So pipeline for them isn't just some vague pie-in-the-sky number. We're talking about qualified opportunities with customers who are already under NDA. And backlog? That's even better. That's confirmed contracts and purchase orders they already have in hand.
So, that pipeline of qualified opportunities, it now stands at an impressive $137.5 million. And get this, that's up 63% from this same time last year. That's some serious growth. And this chart just says it all. This shows the growth in their backlog. Remember, these are actual contracted orders. That number has absolutely exploded. We're talking a 300% increase year over year, now sitting at $15 million. If you're a bull on this stock, this is your whole story, right here on one slide.
So, here's the big question, right? How in the world do you reconcile these two completely different stories? On one side, you've got a disastrous financial print. On the other, you've got this massive growing book of business. So let's talk about what we think comes next.
Okay, so heading into the next earnings call, we are watching 3 things super closely. First up is revenue. Management has to deliver. They blamed the shutdown for delaying work, so now we need to see that work convert. Anything less than a really significant jump in revenue next quarter, and their credibility is going to be on the line, big time. Second, the price action. You should probably expect this stock to remain incredibly volatile. It's basically a battleground right now between fears over that cash burn and hopes that they can convert the backlog. So any headline could send it flying in either direction. And third, the big catalyst to watch for is that integrated demonstration with their partner, Mythos AI. That's planned for the first quarter of 2026. A success there, that could be a major re-rating event for the stock.
All right, so let's put it all together and land on our final rating. How does this all shake out into a cohesive thesis?
So where do we land? We're rating OPTT a market perform. Look, the bull case is absolutely credible. You can't ignore that enormous pipeline and backlog. But the risks are just as real. This is a company in a high-stakes race against time. They have to prove and prove soon that they can turn that incredible pipeline into actual revenue before they burn through all their cash.
And as always, just a quick reminder, this is not financial advice.